Peter, thank you for joining us today.
Glad to be here.
Thank you. Peter is the Managing Director, Head of Strategy, Policy and Risk at the DFSA. He's responsible for strategic planning, further development of the DFSA's policy framework and DFSA's risk framework and culture. Peter is a member of the International Association of Insurance Supervisors Policy Development Committee and a member of the coordination group of the Global Financial Innovation Network. We work very closely with Peter to support the startups with their regulatory requirements, and he have a presentation for us about the DFSA's innovation framework. Peter, the floor is yours.
Peter, would you like to share your screen?
I shall just, I will try and do that, if you just give me a second. Can you see that?
Yes, we can, but we can see the...
I've shared the wrong version, have I?
Yep.
Okay. Let me stop that one. I apologize. This is the second session I've done this afternoon, and the technology didn't work well for me in the first one. So let me just... Sorry, it won't be a second.
No problem.
Nope, that's the same one.
Yes, now we can see.
Is that okay?
Yes.
Okay. So I'll just start. Is that okay, Fatima?
Yeah. Whenever you're ready, Peter. Yes.
Okay, thank you. So thanks to Raja for the introduction this afternoon. It's good to be able to join in discussions today. I think if you didn't know already, you will know by now that colleagues at the FinTech Hive and at the DIFC Authority take innovation and the development of technology very seriously here in the DIFC in Dubai and the UAE. But some of you, I think, may ask, why is that such an important aspect of our collective work? And the answer, as you've heard this afternoon, is because the financial services sector is innovating rapidly, or there is innovation in financial services, depending on which perspective you look at it from. Firms of all sorts are trying to use more and more technology to increase their competitive edge and to defend, create, or enhance their market position. There are very few parts of the financial services value chain that can't be done better or more efficiently or with a better user experience. So there's always room to innovate and to improve. And innovation is very much the new norm for all of us, and that's the why of innovation. It's also the new norm for regulators, and I'm going to give you a run through what we're doing at the DFSA in terms of our innovation agenda over the next 20 minutes or so. I think that's taking me on. That's my agenda for today. I'm going to cover 4 areas: current DFSA policy initiatives in the innovation area, specifically our work on crypto assets. Going to talk about our innovation program more broadly, and then talk a little bit about our engagement with external stakeholders locally, regionally, and internationally, which is all an important part of the innovation agenda. So let me move on to the first of those, the DFSA's policy initiatives, and I'm going to talk here about some things we've already done and some things we're planning to do. So at the DFSA, we have a strong commitment to produce robust and clear regulatory frameworks. Those frameworks should set out proportionate standards for firms, which are designed to promote confidence in the market, and that's obviously particularly important, the promotion of confidence in markets that involve new products or services and in markets that involve new technology. So we have a role to play in promoting the development of markets, obviously the sensible development of markets, We don't necessarily want a free-for-all. So when we look at new policy initiatives, we do take a fairly deliberate approach. There can be unintended consequences that flow from regulatory responses to change in the market. And that's even before you throw in the question of new technologies and innovation. So for a regulator, it's important to try and understand what is happening in a particular market before we try and decide whether that activity needs regulation. If we rush in, we tend to think that we need to regulate everything, and that's not always the right answer. So we're going to talk about a couple of the things that we've already done. Money services. I think we've heard from previous speakers, consumers want speed and convenience when purchasing goods and services. They want real-time access to payment platforms. They don't want things to be complicated. They want a seamless payments experience. And this consumer demand has led to many firms wanting to offer services in the area of payments, whether that be in the retail payments market, in the cross-border remittance market, or in other parts of that sector. Very active in terms of innovation and development of new businesses. So we put in place a regulatory framework that went live in April of last year that covers all of those things: remittances and money transfers, digital wallets, stored value, payments of one sort or another, payment initiation services where somebody else initiates a payment on your behalf, and account information services where people can use your account information with other financial services providers to provide new and different services to you as a consumer. We've had a lot of interest in this, and we're continuing to have a lot of interest in this area and in our new regime. Secondly, just to mention the venture capital regime. Obviously, when you're talking about startups, scale-ups, and the like, sources of finance, and particularly sources of patient capital, are really important. We introduced last year a venture capital regime that was a bespoke regime to facilitate venture capital business, and obviously that's part of a normal funds regime, but venture capital is a specialized area, so we saw the need to promote that type of financing as part of the work that we can do to support the innovation ecosystem that we're all building in the DFSA and in Dubai. So those are two things we've already done. We also last year did some work on digital onboarding. So this is a past and future topic. We often get asked by firms that we supervise what we think of digital onboarding, what we wouldn't allow, and so on. As part of the pandemic response last year, we did work with the Central Bank of the UAE and the Financial Services Regulatory Authority down in the ADGM, and we issued guidance to the market on digital onboarding during the crisis, which we think helped guide what firms were able to do in terms of onboarding new customers when physical contact clearly wasn't possible in the way that it normally is. And some of that obviously continues to be relevant now. And we do intend to issue more guidance on digital onboarding as firms move further into this area. So just to talk about a couple of the other things that we're thinking about, and we will do more on this year. Guidance on the use of enabling technologies. I think the speaker after me may comment on this as well, but we are working as part of a group led by the UAE Central Bank with the other regulators in the UAE to come up with and publish some guidance on the use of what we've called enabling technologies. And enabling technologies are a number of the things that some of you will be very familiar with and some of you will be less familiar with, but they're certainly terms that you will all have heard. So those technologies that we're going to issue guidelines on are the use of AI and big data, the use of APIs, the use of biometrics, the use of cloud, and the use of DLT. And the guidelines will set out basic principles that all financial services firms, not just startups, it's important to make that point, all financial services firms should think about when they're going to be using such technologies. The guidance will be broad enough to cater to all types of business models of firms operating across the UAE, and we expect to engage with the market on that in the near future. And then there are two areas that I've already mentioned within that where we will want to see more in due course, and that's on the use of APIs and the need for open banking, and more on our approach to firms using artificial intelligence and machine learning, and particularly some of the problems that arise with embedded bias, depending on the data sets that you use to train your AI or machine learning system, and also some of the problems around explainability, where people can explain what goes into an AI or ML system, but they find it difficult to explain what comes out. So those are some of the things from a policy perspective that we have worked on and are working on, which is obviously an important part of our agenda. It sets the framework for firms to apply for licenses and so on to do particular activities, and it sets the ground rules by which both startups and other firms need to operate. Just to specifically focus on one area of crypto assets, I'm sure you all know many other terms to describe these things, which are essentially a digital representation of value, rights, obligations, which are created, stored, and transferred electronically, usually using distributed ledger technology. So we ventured into this area with a consultation on regulating security tokens. Consultation is open for comments until the end of this week, so please do send us a response if you have views in this area. The second phase of work we'll do on crypto assets will cover everything that isn't a security token. Just a few quick thoughts on security tokens themselves. Why are we regulating them? Well, at the moment, most regulators regulate the marketing, the sale, the distribution, the issuing of investments, and which includes things like shares and bonds, and also often includes things like derivative products. And many of the things we see in the tokenization area at the moment are essentially those normal investments, but tokenized, which is where the term security tokens obviously comes from. And I do think it's important to recognize that the technology may be different, but the underlying economic and legal rights that people have by owning these instruments are not necessarily any different. In some cases they are different, and that's one of the interesting things in this area, that people can do different things and combine different properties of different instruments, and market those to investors and see what they think, and whether those investments become ones that people want to buy or not. In terms of security tokens, we rely on elements of the existing regime in the consultation measures that we've proposed. There are some additional measures relating to the specific use of DLT, and some of the key areas we cover are things like what sort of trading venues we will allow people to use, and what those trading venues need to be able to do to trade security tokens. A significant change from current markets and exchanges is that we propose to allow direct retail access to trading on security token markets rather than intermediated access. Those of you who've made a number of investments over time may well have done it through a broker. Nowadays, almost certainly an online broker, but you'll still have done it through a broker, more or less. And that's been the case for many years, until the crypto explosion, if we want to call it that, where direct retail access to markets and exchanges has become in many ways the new norm. So that's something that is new for us, and new in the way that conventional markets have been regulated, but not new in the crypto assets area. In the second phase, we'll look at the other many types of tokens that are out there: exchange tokens, utility tokens, asset reference tokens, there's a whole alphabet soup of different types of tokens that people are talking about and are using. And we'll come up with regulatory proposals on those. We won't necessarily regulate them all in the same way. We won't necessarily regulate all of them. It just depends what our view we reach on the risks that these instruments pose. And obviously there are very, very different things. The recent press around non-fungible tokens and tokens linked to art or other unique items has been an interesting addition to our thinking in this area as to what, if anything, we need to do about that sort of instrument that's offered into the market. The answer again may be that we don't need to regulate anything, but it's certainly something we need to think about. But I think more importantly, it illustrates the fact that this market does change and does move and does continue to evolve. I'll move on from talking about our policy initiatives and just talk a little bit about our broader innovation program, of which the main feature really is our innovation testing license. And the innovation testing license in many ways complements the programs that the FinTech Hive has run successfully for several years and complements the efforts of the DFSA authority in promoting innovation. So our program overall has 4 pillars to it, which is the innovation testing license as one, our work on RegTech and SupTech or supervision technology, and also cross-border work. So our innovation testing license is what is referred to in other markets as a regulatory sandbox. We let firms test their innovative products or services in a safe environment. Why did we decide to go down this route? What benefits do we see from an innovation testing license? Well, for us, it gives us the opportunity to observe firms in a controlled environment, while at the same time deepening our understanding of the risks and benefits that arise from innovative business model and use of technology, which allows us to critically assess our existing regulatory approach, framework, and look at whether that needs to evolve. We also require the firms who have an innovation testing license to deal with limited numbers of clients, so that we do contain the risk that we're letting the end consumer be exposed to here. And for the participant, the firm holding the innovation testing license, the startup, it provides the opportunity to take an iterative approach to building out how they're going to deal with regulation as part of developing their business. They can look at response in the market to their product or service, and then alongside that, invest in developing a regulatory compliance infrastructure over time. The objective is that by the time the innovative product or service can fully enter the market, when they graduate, as we say, from our innovation testing license, everything is ready for them to operate in the same way as a firm that got a conventional license from the DFSA. So it is a gradual testing process that has benefits for everyone. It's been very popular, lot of interest. We continue to have a lot of interest. We're dealing with many firms at the moment at various stages of the application process for an innovation testing license, and we'll invite further applications for the next cohort in the summer of 2021, later this year, obviously. I said I'd talk about external engagements, and there are 3 things really. Creating an ecosystem for firms to thrive in the DIFC, in Dubai and in the UAE it's a key priority, not just for us as a regulator, but for other people as well. I've already talked about the work that we're doing with other UAE regulators on guidelines for technology use. But we're working on other things as well with the other regulators to try and help the UAE retain its position as the destination of choice in the region for innovative companies and the destination of choice for startups. And so we're doing what we all can as regulators to facilitate that and to encourage that. As well as working with regulators, we work with other agencies in Dubai. I've already mentioned the FinTech Hive and the DFSA Authority, but we also work with the Dubai Future Foundation, with Smart Dubai, with the Centre for the Fourth Industrial Revolution, and others. So we're plugged in, I think, to many things that are going on. I'll just mention one particular thing from the Centre for the Fourth Industrial Revolution, where we're working with them and with the DFSA Authority to run a number of proofs of concept and pilots to test tokenization of a range of assets and to explore the use cases for tokenization and for DLT that those pilots can lead to. So that's going to be interesting work. It's going on at the moment, and the initiative aims to see what is and isn't workable in the financial services sector in terms of tokenization of different types of assets, and also to inform ongoing regulatory developments and developments in the commercial market as well. So that's the sort of domestic angle. We also talk regionally with regulators and with the Middle East FinTech Association, which is based in the DIFC as well. Then on the international front, just very briefly, because I'm conscious of time, we've taken a leading role in GFIN, which is the Global Financial Innovation Network, and that's a somewhat informal group of regulators who are interested in innovation and interested in how to facilitate the business of innovative firms who want to work across multiple jurisdictions. There are now, I think, more than 50 regulators globally involved in that group, and we're involved at the moment in some cross-border testing where we have firms who are testing in multiple jurisdictions at once, which is an interesting use of regulatory sandboxes. We're involved in a number of other work streams, including on the other aspects of our innovation program that I referred to earlier on RegTech and on SubTech. We're also working with what we call the international standard setters. IOSCO is the global grouping responsible for standards of supervision, setting standards of supervision in the securities markets and investments area, and they have a FinTech network that we're part of, and also a decentralized finance working group, which we're part of. Just a word on decentralized finance, which many of you will have seen and heard quite a lot about recently. It's becoming an increasingly important trend in innovation, but I think it's fair to say it does pose a number of challenges for regulators. So that brings me to the end of my overview. So just in conclusion, I'll just say that we can, and we will continue to support the DIFC's innovation ecosystem that's been talked about today. We'll regulate where appropriate and not regulate where we don't need to do so. Being a part of this thriving ecosystem is exciting and a challenge for us. It helps us address some of the innovation challenges we face ourselves as an organization. But importantly, we can be part of building something new and different, facilitating the development of new services and products while protecting consumers, market integrity, and preserving financial stability. And all of this, of course, as I'm sure you've heard today already, we do within our overall aim of supporting the continuing growth and success of the DIFC, of Dubai and the UAE. So that's everything from me, and I'll hand back to Fatima now. Thank you.